Welcome back to Investing Talk podcast today. We're zeroing in on General Electric, GE, as of March 17, 2025.
Okay.
You've given me some pretty fascinating information about recent developments affecting its stock.
Right.
And we're going to unpack what stands out.
Sounds good. We have a lot to cover. A major investment in U.S. manufacturing,
Okay.
a big defense contract,
Mhm.
what the analysts are saying about the stock, what big institutional investors are doing. We also have some information about the general market situation, and we're going to look at the technical side of GE's stock performance.
Okay.
So our mission is to pull out key insights for you.
Okay, great. Let's get started. So on March 12th, GE Aerospace announced this pretty substantial investment, nearly $1 billion across 16 states here in the U.S.
That's a lot of states.
It is.
Yeah.
And this is actually double the commitment from last year.
Wow.
And the goal here is to improve the safety, the quality,
Yeah.
and the timely delivery of their engines. This also seems to be in line with this big push towards more domestic manufacturing.
Yeah.
So we could be talking about something like 5,000 jobs created here in the U.S.
That's a lot of jobs.
Yeah. What's your take on how the market might see this investment, especially with this focus on domestic production?
Well, I think what's interesting here is not just the amount of money, but also where it's going.
Why?
Are they using this money to fix problems in their supply chains, or are they using it for new products and technologies? So understanding where this money is going gives us a much better idea of GE's long-term strategy than just saying they're creating jobs and focusing on domestic production. The market will probably like the headline, but a deeper analysis of where this money is going will be really important.
I see.
It shows they're serious about aerospace and about operating in the U.S., and with all the worries about supply chains and national security in aerospace these days, this could be seen as a smart move to reduce risks in the future.
Interesting point about the strategic focus. Now, something else I noticed was a $399 million contract awarded back on December 12th, 2024.
Okay.
For something called Next Generation Adaptive Propulsion prototyping. This was just reported on March 17th. And it really highlights how strong GE is in both aerospace and defense.
Absolutely.
Quiver Quantitative pointed this contract out, and it seems like it was a factor. In the stock going up 2.5% on March 17th, it closed at $202.03.
Yeah.
Even though the market was pretty volatile that day.
Yeah.
So what does this contract tell us about what GE might be able to do in this critical area going forward? And maybe for those who don't know, can you explain what Quiver Quantitative is and why it's a big deal that they noticed this defense contract?
So Quiver Quantitative is a platform that looks at different kinds of alternative data, including government contracts and unusual stock trading activity. The fact that they noticed this defense contract really adds to the idea that this is a big win for GE. This contract for prototyping Next Generation Propulsion shows that GE is still innovating and that they have a deep relationship with the Department of Defense. Getting a contract this big for cutting-edge technology shows they're still a leader in this field. The market reacted positively. The stock went up, even though the market was volatile. And this suggests that investors see the potential for long-term revenue, and they understand the strategic importance of GE. Being at the forefront of this kind of advanced development, it's not just about the immediate value of the contract, it's about the possibility of much larger production contracts later on, if this prototyping is successful.
Makes sense. So it's about the future business, not just this one win.
Right.
Let's talk about the future outlook. Redburn Atlantic started covering GE in late February with a price target of $250.
Okay.
Their analysis says aerospace will keep growing because there's strong demand for air travel and defense spending is going up. This optimistic view comes at a time when the market is pretty anxious, especially about the potential impact of a 50% tariff on Canadian steel and aluminum. This was mentioned on March 11th, and it caused a big drop in the Dow.
Yeah.
Despite all that, GE has been relatively stable, and it's outperformed the S&P 500, which has dropped 6% since January.
So how did these contrasting forces, positive company-specific news, versus these wider economic concerns typically affect how stock is valued?
Well, it shows how company fundamentals and the overall economy are always pushing and pulling. Strong positive news about GE's core businesses, like aerospace. And the fact that analysts are optimistic can make it resistant to market downturns. But macroeconomic headwinds, like possibility of big tariffs, create uncertainty about the economy and how profitable companies will be, which can still cast a shadow, in GE's case, the strength in aerospace. We'll talk about healthcare later. Seems to be offsetting the negative feelings coming from tariff worries.
Investors are basically weighing the concrete good news about GE against the potential for wider economic problems.
Let's switch gears a bit and look at what investors are doing.
Sure.
Egerton Capital UK increased its stake in GE by a significant 22.9% in the fourth quarter of 2024.
Okay.
This was reported on March 13th. And it seems like a big vote of confidence in where the company's headed.
Yes, absolutely.
So what kind of impact can such a large increase in holdings by a big institutional investor often have on a company's stock price, and how the market sees it in general?
A big increase in institutional ownership, like what we've seen with Egerton Capital, can be a really strong signal to the market.
How so?
It means that a sophisticated investor with a lot of resources has done a lot of research and sees real value and future growth in the company.
Interesting.
This can then boost confidence among other investors, both big and small, and potentially increase demand for the stock, and that can support its price. It also often suggests that the company's long-term strategy and the management's vision are resonating with major players in the investment world.
As of March 17, 2025, GE's stock price was at $202.03. And as we know, the market is quite volatile right now.
Very.
The S&P 500 has fallen 6% since the beginning of the year, officially entering a correction. The Dow and the Nasdaq have also seen significant declines.
Right.
This volatility is being blamed
Yeah.
on those tariff policies and growing concerns about a potential economic slowdown. But GE has shown some resilience, gaining 2.5% on March 17th and trading within a range of $196.33 to $203.60 for the day. Over the past month, GE stock has moved between a high of $210.39 in mid-February to a low of $191.01 just a week earlier. What does this relative stability of GE stock tell us about its business or how investors are viewing it compared to the broader market?
The fact that GE is holding its own in this market environment is really interesting. It suggests that its diverse business portfolio, with strong positions in sectors that tend to do well during economic uncertainty, like aerospace and healthcare, is providing a buffer against the wider market jitters. Investors seem to be favoring companies with more predictable growth and potentially less direct exposure to the immediate impacts of trade disputes. The recent positive news we've talked about regarding GE is likely further solidifying this perception of stability and the potential for it to outperform the broader market in the near term.
Okay, so if we look at the bigger picture, GE's performance over the past year shows a pretty solid 44% increase, going from $140.88 in March 2024 to $202.03. This clearly beats the S&P 500 over the same period. However, while GE has shown a pretty significant recovery, it still hasn't reached the all-time highs it saw in the early 2000s.
Right.
So what can we learn from this longer-term perspective when trying to understand GE's current valuation and its potential going forward?
The strong year-over-year growth shows a significant turnaround and a renewed sense of investor optimism. Following the substantial restructuring and strategic changes the company has undergone in recent years. However, the fact that it hasn't yet reached those much higher peaks from the early 2000s serves as a reminder of the scale of those past valuations, which were based on a very different business composition and prevailing market conditions. The current valuation likely reflects a more focused and streamlined GE. Its future potential will now be heavily dependent on the continued success and growth of its core aerospace and healthcare divisions. In the years to come, it's a journey of rebuilding and demonstrating consistent performance in these key areas.
Speaking of healthcare, GE's healthcare division, GE Healthcare Technologies, GEHC, is being highlighted for its strong earnings growth and positive price momentum. While we don't have the specific Q1 2025 earnings details for GE itself yet, the strength in its healthcare unit, combined with the robust demand in aerospace, might be acting as a shield against some of the tariff-related pressures that are impacting other sectors more directly. So in uncertain economic times like these, how important is it for a company to have a diversified set of strong business segments? For its overall stability,
sector diversification is proving to be incredibly valuable in the current economic climate. For a company like GE, having significant operations in both more cyclical sectors like aerospace, which benefits from strong economic growth and travel, and more defensive sectors like healthcare, which tends to be less affected by economic downturns, creates a much more resilient overall business. When one sector encounters headwinds, The strength of another can help to mitigate those pressures, leading to more consistent earnings and greater investor confidence.
Okay.
The strong performance we're seeing from GE Healthcare Technologies is undoubtedly contributing to the overall positive sentiment surrounding the parent company.
All right, let's finally take a look at some of the technical analysis for GE's stock. As we mentioned, it closed at $202.03 on March 17th, a 2.5% increase, with an intraday range of $196.33 to $203.60. The stock has rebounded from a low of $191.01 on March 10th, but is still below its February high of $210.39. The one-year trend shows that impressive 44% gain, peaking at $212.19.
Right.
Now, the interesting part here is that the volume of shares traded was higher on the day the price went up, March 17th, compared to the day it went down, March 10th.
Okay.
Which some analysts interpret as what's called accumulation, suggesting there's buying interest.
So what you're saying is accumulation in technical analysis suggests that investors are buying the stock over time, even on dips, indicating underlying positive sentiment.
Yes. So the stock closed above what's estimated to be its 50-day moving average, around $202, and well above its estimated 200-day moving average, somewhere in the $175 to $180 range. These are generally considered bullish signals. With the 50-day representing the short-term trend and the 200-day the longer-term trend, the Relative Strength Index, or RSI, which is a measure of buying and selling pressure, likely moved from what's considered oversold territory below 30 on March 10th to a more neutral zone between 40 and 60. By March 17th, key price levels to keep an eye on are resistance around $203.60 and support at $196.33. Some analysts believe that if the price breaks above $205, the next target could be that $212.19 high, while a drop below $196 might lead to a retest of the $191 low. So based on all of this, the technical analysis seems to point towards a buy recommendation. What are your thoughts on how well these technical indicators align with the fundamental news we've been discussing?
I think the technical analysis and the positive fundamental news we've talked about are really lining up here.
Okay.
The positive announcements about the U.S. investment in the defense contract likely led to the increased trading volume and price increase on March 17th. Which is reflected in those technical indicators, suggesting accumulation that underlying buying interest. The fact that the stock is trading above both its short-term and long-term moving averages reinforces the bullish sentiment that's being driven by these positive developments. And the optimistic outlook from analysts, the recovery from that low on March 10th, potentially coinciding with the RSI reaching oversold levels, does suggest that buyers saw an opportunity and stepped in, likely encouraged by the company's underlying strengths. The resistance and support levels identified by the technical analysis provide a useful framework for us to monitor how the stock price might react to any further news or shifts in overall market sentiment.
So when we put it all together, the big investment in U.S. manufacturing, that substantial defense contract win, the positive outlook from analysts about the aerospace sector, increased backing from a major institutional investor, and GE's relative strength in this shaky market, all supported by these encouraging technical indicators that paints a picture of a company navigating a challenging economic landscape. This is pretty impressive strengths.
The resilience we're seeing in GE's stock price, particularly its ability to outperform the broader market during this downturn, does suggest that these positive factors are resonating with investors. However, the ongoing macroeconomic uncertainties and the fact that GE is still below those historical peak valuations remind us that the investment landscape is constantly shifting and requires continued vigilance.
Absolutely. What stands out to you most from this overview of GE's recent performance and the factors influencing it?
What stands out most to me is the strength and strategic positioning of GE in these critical sectors of aerospace and defense, which seems to be providing a buffer against those wider economic anxieties. It makes me wonder how sustainable this outperformance will be if those macroeconomic pressures get worse, and how the upcoming earnings reports will either confirm or challenge this currently positive trajectory.
Really interesting points. As always, thank you for sharing your insights.
My pleasure.
And to our listeners, we encourage you to subscribe, like, and comment to let us know what other topics you'd like us to explore in detail in future discussions.